Hey everyone, it's Alex from TaxValet. I wanted to make a quick video just to provide some sales tax updates and what we've been seeing over the past year. Hopefully these tips will help you get your business compliant and avoid some potentially costly sales tax audits. Speaking of audits, the first thing I want to talk about is the fact that we're seeing an increase in audits. All of us were kind of waiting in the industry for sales tax audits to increase because we knew that there were huge budget shortfalls because of COVID. But actually, during and after COVID, we saw a decrease in audits overall. All that is changing now, where we are seeing a huge spike in audits. So it used to be pretty much every year up until about 18 months ago, about 1% of TaxValet's clients were under audit. As of right now, that has increased to about 4%. So we're seeing like a 4x increase in audits. Now, this isn't just unique to TaxValet's clients. We've been chatting with other sales tax firms, and they have similarly been seeing an increase in sales tax audits. We've also been chatting with the auditors, and they've been telling us we have been required to take on more audits and have a bigger caseload. Some of them have 30, 40 audits going at a time, and the Department of Revenue is hiring more auditors as well. So all of this is really just creating a perfect storm for a business that isn't compliant to potentially have to pay a whole bunch of money out of pocket. There are some states that are a lot more risky than others. So those states are going to be California and Illinois. Those are not new states for us, like we always knew that those were aggressive states, as well as Wisconsin, that's a new one, and Washington. I also just want to point out that your home state is very likely to audit you randomly just because it's your home state. Why did they do that? I don't know. Um, so those are the areas that I'd be concerned with the most. Your home state, California, Illinois, Wisconsin, and Washington. And the areas that the auditor is focusing on is sort of shifting from what we've seen in the past. So the first thing we're seeing is that the auditors are really digging for use tax obligations. So what is use tax? Use tax is if you purchase something for use in your business and you did not pay sales tax on it, then you have an obligation to pay use tax on it. So this will frequently come up with software, for example. Let me give you an example because use tax can be complicated to understand. Let's say you are selling toilet paper and you purchase a whole bunch of toilet paper from your supplier tax free with your resale certificate. But then you then use that toilet paper in your restrooms. Since you didn't pay sales tax on it because you were presumably purchasing it for resale, you now have to pay use tax because you are using it. And the use tax rate and the sales tax rate are generally the same. This is why we say sales and use tax, because they're complementary to each other. So auditors are really focusing on use tax, and use tax can get a lot more complex than you might think. So for example, if you are giving away free samples, use tax can come in. So it's really, really important to work with someone who understands use tax, just to understand if there's some potential area of your business that needs to be considered. Another area is fixed assets and expenses. So the most common use tax exposure we see relates to bigger purchases like furniture, software, fulfillment services where sales tax wasn't paid. So again, this has to do with use tax, but it is the auditor looking at that fixed assets and expenses category within your books. And lastly, this is like the biggest nuclear gnarly one. They're looking at the Nexus start date. So what date did you put on your sales tax permit when you originally registered? Because the auditor wants to know if you chose like January 1st, 2022, but you really crossed the economic nexus threshold in 2019, 2020. They want to look at that, particularly because the statute of limitations is beginning to run out. And generally, unless they have a reason to, they are not really going to be looking beyond that statute of limitations. And since the statute of limitations is 3 to 4 years in each state, the auditors now are wanting to look at when did you first have Nexus in our state, since those laws went into effect 3 or 4 years ago. So speaking of sales tax permit registrations, we have a short list of states where they are always going to be questioning you regarding your permit start date. So if you have Nexus in any of these states and you are not registered, you really need to have a careful strategy for what your plan is going to be in terms of registration. This is where working with a sales tax consultant can really help, because consultants like us, we see this all day, every day, and we sort of know what's going on. So Arizona, Illinois, Maine, Washington, Wisconsin, these are states that are basically pushing back when you register, unless you use a date far in the past, and they're going to say, are you sure that was your permit start date? Here, sign this additional affidavit, because if you're lying to us, you're now going to be held criminally. So not a really good situation. South Dakota is another state where they actually require a phone call to confirm the total number of sales before issuing a permit. Now, in terms of legislation you should know about, we've seen a trend this year with states choosing to eliminate the transaction count threshold for economic nexus. So, economic nexus is what allows states to require that you collect and remit sales tax even if you don't have a physical presence there. Most of the time, that threshold is $100,000 in sales or 200 separate transactions. We are seeing states remove that 200 separate transaction count because it's actually not profitable or lucrative for the state to have some e-commerce business that makes like $300 a year in sales to get a permit and then collect and remit the tax, because now the state has to deal with the filings and it literally costs the state more money. So they'd rather just work with the businesses doing over 100K. I wish all the states just did this from the beginning. It's a huge waste of time. Excuse me. It's a huge waste of time for everyone to have to file returns if you're under 100K and over 200 separate transactions. Second big trend we're seeing is retail delivery fees. So Colorado was the first. They imposed a 75-cent retail delivery fee on all taxable transactions. Notice that this is a fee and not a tax, and that's important for a whole bunch of like complex technical legal reasons. But in effect, what that means, at least in Colorado, my home state, was that they were able to create this without taxpayer approval. And I'm sure that other states are similar, right? So if the transaction is taxable, then 75 cents needs to go to the government as a fee for the delivery fee. And that's in order to like maintain the roads and bridges and things like that. The implementation and rollout of this in Colorado has been kind of a nightmare. The technology aspect of this has been a total nightmare. A whole bunch of systems are just like not set up in order to do this correctly. Many people have found that like updating their ERPs or sort of like large technical systems, it would actually cost more for them to update it than to just pay this out of pocket. There was a whole bunch of drama in Colorado about like them saying that you can't pay it out of pocket, it has to be collected from the customer. And then there was a whole bunch of pushback from the business industries. And then finally, Colorado said, okay, we don't care who pays it as long as it gets paid. So that is still developing, but it's very much a thing that is here, it exists, and we think it's going to continue to expand. I mean, we see Minnesota has introduced a retail delivery fee, as well as New York City, but those are not in effect yet. I think that it is very likely that we're going to see many, many more states introduce something similar. Unfortunately, it just adds more complexity, another return, another thing that needs to be dealt with. TaxValet's clients, so just for example, we handle this for our clients. So if you are a TaxValet client, you don't have to worry about this. Uh, Third legislative trend has to do with exemptions for essential items. So food, baby products, feminine hygiene products. There's been a huge push, I think, just with rising inflation rather, for legislators to say, hey, let's make this easier for our constituents. All of these essential products, let's now create an exemption for them. Not all of the exemptions are permanent, though, which I personally think is kind of ridiculous. I think if you're going to create an exemption, create an exemption. many of the states that have created these exemptions, say for like feminine hygiene products in California, the exemption is set to expire in a period of time, like 5 years. In terms of other changes, just sort of in the sales tax industry, Shopify released its tax calc engine this year, which is really cool. So if you want live tax calculation, you no longer have to have AvaTax. You no longer have to pay for an Avalara subscription, which is great. It was a little rocky with the rollout, and it had some bugs that were fixed along the way. In general, we're happy with it. What a lot of people don't realize though is that it's not free. And there is an option to still have the old tax calculation with Shopify, but it's super limited. And so one of the things we do for our clients is we analyze, like, is it going to be a better ROI? And like, is it worth the return on investment in terms of sales tax risk for you to use the free tool versus the paid tool? And depending on the product category you're in, it could actually be a really, really good idea to upgrade to that new Shopify tax. In terms of sales tax software, we saw Stripe acquire Taxstar this year, and we saw Vista Equity Partners acquire Avalara. So Stripe acquiring Taxstar was kind of a funny move, I think, because they did the acquisition. Stripe was doing really, really well financially, and then they got like revalued because of the tech sector crashing effectively, and then they decided to lay off a huge amount. I think it was like 70% of Taxstar's employees. So all of the investment and development in Taxstar's future product roadmap is gone. The support has been moved to another country. They are keeping Taxstar alive and updated, but it does not appear that they are continuing to invest in its continued development. With Vista Equity Partners acquiring Avalara, I think it's going to be a while before we see really major changes with Avalara. But I worked for a software company that was acquired by Vista Equity, and I can say I know what they're going to do. And we're already hearing murmurs of that from our contacts at Avalara. So in general, what we're hearing is that the older, more experienced, aka higher paid employees are being pushed out and being replaced with greener, newer, cheaper talent. This is what Vista Equity Partners does. They call them HIPPLs, high performing entry level employees. What this means for Avalara in the long run remains to be seen. I think many people already struggle with Avalara's support. Their product, I think, is pretty good if you know how to use it, but it's a scalpel, and many people hurt themselves when they use a scalpel because they don't understand how to use the software in order to effectively manage their sales tax obligations. So that's a wrap. If you have any questions, you want to reach out, you want to learn more about TaxValet, feel free to reach out to me. I'm always happy to connect you with resources, team members, whatever it takes to get you the answers and help that you need. Take care.